Hello and welcome to episode number 6 of Mortgage Strategy 101, where we educate you on how to execute and implement mortgage strategies that will save you and make you tens and even hundreds of thousands of dollars over your lifetime. Today's episode is dedicated to our strategy number 5, which is the fabulous offset account, the bank's greatest invention. And really the offset account is the grease that spins the wheels of all the other mortgage strategies on most of the other mortgage strategies. So how does an offset account work? So firstly, if you've got a home loan with a debt of $500,000 on it and you have $300,000 in offset, well, you're only paying interest on the difference, $200,000. So we like to call it the bank's greatest invention. And if you had that $300,000 and put it into the home loan, well, your balance would be exactly the same. Okay, so the power of the offset account is that it separates money into a credit account rather than putting it directly onto the loan into a debit account. And what that can enable you to do is optimize tax deductions and a whole raft of which can then help you to also make a financial case for holding property when you buy new properties, and also make a financial case for you to be able to hold properties when you buy new properties as you accumulate more properties. And that's where the benefits to you can really add up over a lifetime. Okay, so firstly, the offset account reduces the interest payable, as we've just touched on. Secondly, you'll earn greater savings on an offset account than on an interest earning account. And that's because banks will charge you a higher interest rate on your loans than they'll pay you on an interest earning account. So for example, at the moment you might be paying an interest rate of 4 something percent or 5 something percent. And if it was in a savings account, the bank might only be paying you 1 or 2%, and then you'll be taxed on that as well. So that's why it's better offsetting your loan than in an interest earning account on most occasions. So your savings are tax free when you're reducing interest, but tax is payable on an interest earning account. You have every dollar working for you 365 days a year if the money is sitting in an offset account. And now a number of lenders are allowing you to have multiple offset accounts to reduce the interest payable on your mortgage, but also facilitate you to have an effective money management system, which is one of our 5 core mortgage strategies. And that certainly feeds into your money management system certainly is optimized through the use of the offset accounts when you have different buckets. And as you would know, our preferred names for our buckets are Grow, Life and Fun. And then you can have other buckets beyond that. So that's number 5, superior money management. Number 6 is risk management. So an offset account can enable you to build up your cash and provide you with a bigger buffer and a larger buffer at a faster rate than if you were putting the money into the mortgage, because you would only have access to less redraw on most occasions. Whereas if it's in your savings account, you've got that safety net, and we know that the only reason you will end up in a true difficult financial position is, well, worst case scenario, if you run out of money. So the bigger buffer you have in savings, the larger safety net you have, and obviously that's a risk management strategy, and that is one that can be facilitated through the use of offset accounts. Okay, so probably the last two are two of the more complex ways an offset account can work for you, and they are through optimizing future tax deductions and optimizing your ability to hold and accumulate properties. So I've just done a simple example where if your home loan's got $500,000 owing on it, and you've saved $300,000 into your offset account rather than putting that $300,000 on your home loan and paying it down to $200,000. Okay, and once you've paid that down, if you wanted to keep that home when you upgrade and use it as an investment property, well, you'd only be able to claim interest on $200,000. Whereas if you've got the $300,000 in the offset, well, when it becomes an investment property, when you upgrade, you can actually claim the interest on the $500,000 because you've kept that separation between accounts, okay? So you can then put that $300,000 towards the future home, so you have less bad debt on the future home, and you're still able to claim the optimal amount on what was your home. It's now become an investment, and therefore the interest is now deductible on that property. The mistake a lot of people do, which means they fall foul of what's called the purpose test and the ATO, and means they're claiming tax deductions illegitimately, and the ATO have just come out and said they're looking into this more closely with property investors, is people will pay down their home loan and think they can redraw. So redraw this $300,000, use it to pay for the future home, and then they'll claim the $500,000. But the problem with that is that $300,000 was the purpose it was used for was to purchase the new house, okay? Even though it's in the original loan for the old house, but that's been paid down, money's been retaken out and used to pay for the new house, so therefore it's not tax deductible. So this is a common misconception and something that isn't necessarily easy to understand, but hopefully that makes sense. But if it doesn't, please reach out to us and we can sit down and talk it through in more detail and as it pertains to your personal situation. But this is one of the key ways that the offset account can create, in effect, a really clear separation between your mortgage debt and what may or may not be deductible and the money in your offset account, which then gives you the flexibility to optimize tax deductions, hold property whilst you accumulate future property, particularly relevant if you are considering upgrading your home into the future and you'd like to keep your existing home as an investment. So there you have it. There's a number of ways the offset account can optimize your long-term savings and wealth creation. If you found that useful at all, please reach out to us and make a time to sit down with myself or one of our strategic mortgage brokers. Until next time, have a great day.